Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 27th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES and the daily time frame. Real quick reminder here, we have Fed Chair Powell coming up to speak here very shortly at about 9 a.m. Central Time, and that could influence the market a bit here one way or another depending on what is said. At the very least right now, we were looking for lower lows heading into today's session from yesterday's close based on the lower value relationship and the confirming close, which means any pullback here could be sold for at least a new low. We have lower highs so far, lower lows so far. It's a very short-term kind of downtrend at the moment. But where that breaks here is kind of that midpoint from yesterday's session. That's right around where we are right now. It's about 44.80 or so, 44.79.63, so call it 44.80, and that's kind of the major pivot there for early directional bias. Overall, we still have a very narrow 4-day range, relatively speaking, so we could easily trade back up within the range and hit 4,500 today and still kind of stay within the range. But if there's a failure to get above 44.80, that'll be an early indication that perhaps we may test a little bit lower, and that could open up some weakness down the road. At the moment, intraday VWAP trending higher. Higher lows, higher highs have been developing, and again, above 44.80 begins to squeeze back toward the highs of the week, 44.98. All right, let's take a look here at the NQ. NQ, again, very narrow 4-day range here. Inside day at the moment. Let's bring this down to 4 days. Right there, and when you see this right here, you'll notice again this 4-day range is being quantified right here, and you have 35% of average range, just 141.75 points of range during that period of time. That's super narrow. The last time we were here, we're kind of in this narrow range that kept on going for a while. We also had this period right here where it was pretty narrow for 4 days, and then it got that failed low and pushed briefly, but this is the most significant compression we've seen, and again, that could open up some degree of volatility to come. Perhaps at the beginning of the next month, you have the potential to see about 494 points of range, so anywhere between 400 and 500 points of range up ahead. If we saw some sort of major drop first, that could lead to some sort of tail or rejection, and that could lead to a push higher. Say 15.1 plus 400, 15.1 plus 500, and you're right there at about 15.5 to 15.6. So that could be the path forward here. Again, when you have a narrow range of this magnitude, there's a tendency to break both sides of the range. If it's down first, it could be a flush event that leads to a good bounce and rally. But right now, stuck inside the range here until proven otherwise. Let's take a look here at crude oil. This one right now up 2% inside day yesterday, and already a breakout and run here today. Very, very strong 2-day turnaround, huge 4-day range here, which suggested more strength ahead. We looked at those scenarios here before. That was a huge 4-day range continuation, and we saw the follow through for the next 6 days. And right now, after this strong 2-day move, we've seen a 3-day follow through, and we still have 70.27 above. So that's the short-term target here that we've been looking for. Ever since this thing rejected down here and was able to overcome the 65 level here, 65.02, the key range low, the idea was now any pullback into that low is defended for a continuation to 70.27. So we're still on a path for 70.27. Stop run day in play right now. Rising VWAP in the intraday. Trending structure, bullish trending structure at the moment. But here's the deal: is once we do get there, are we going to see some sort of broader rejection again? We're in a downward sloping channel at the moment, and we're coming up to the upper end of that channel, and again, are we going to see another major wave downward? Are we going to push back toward those 58s, which is the previous quarter's low? So that's going to be a big zone right here. While we do have a little bit more upside ahead, Watch that 70 level because that could present some sort of significant rejection. If we see that rejection play out early next month or sometime soon, it could be about a 10 handle drop here. We're looking at 70 down to 60 at the very least, and perhaps as low as those 58. So it could be significant. So something to watch out for here as we move into the next month. All right, lastly, taking a look at gold futures. Gold futures right now remains within the upper market structure here between 1760 and the 1840 level. It's been the zone that it's traded in for a while. You had your flash event, 2-day crash here, back up, recovered the 1760 level, and has been above it ever since. There could be more chop in here, but the idea is as long as it stays above 1760 here, it's headed up toward 1835 to 1840 still. We may continue to chop in here a bit more. If we were to pull back pretty deep, any rejection down here could be a great quick move across a range here. So everything's still pointing to the upside as long as 1760 remains intact. From a longer term perspective though, gold has had the top has been in for a while here. We definitely seen some major reaction on this lower edge, and we're coming to a point where the auction has shrunk here. It's the 1675 level, which has been significant over the last 2 years, and then you have that rising or that dropping upper trend line here that's coming down to a point. So we're really just kind of trading between 1840 right now and 1760, and at some point a bigger move is coming from a longer term perspective. All right, that is it for now. We'll see how this plays out heading into the weekend. Everyone have a fantastic Friday. Have a great weekend. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.